Now on Bloomberg Intelligence, Munis in Focus.
All right, Focus on Munis is brought to you today by BAM Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit BAMBonds.com.
BAM?
There you go.
Did you
BAM
expect
Bond.
me to do that there? Oh, okay,
No,
okay.
That's all right. It's all right.
Okay.
They've kind of changed the copy. It
Yeah, they have.
doesn't
It's
flow as
confusing.
well. But I'll tell you, Eric Kazatsky, he's still here, senior municipal strategist for Bloomberg Intelligence. Hey, Eric, let's talk about the municipal bond market here. I'm looking at the Bloomberg Municipal Bond Total Return Index, up about 1.07% so far this year. What's the expectation in the muni bond market this year?
I mean, the expectation is that we're at least going to try and earn the carry on the index, which is about 4%, 4.2%. That would be a good year, sort of given all the unknowns that are coming down the pike, right? And the biggest one is going to be what's going on with extensions of the Tax Cuts and Jobs Act and how that's going to impact the muni market.
And what do you think?
You know what? We're in the camp, and this is slightly different than other people on the street, that we think that's pretty going to almost benign impact to our market. Look, there's some areas that could see an impact, the higher ed, healthcare space. They could sort of impact that 501c3 status or the ability of these, large IBs with huge endowments to borrow in the tax-exempt market. But on the margin, I think that's going to really sort of be the extent of it. Look, everybody can agree that state and locals borrowing at lower rates is a huge benefit that everyone can get behind.
So I guess with those kind of, unknowns here, who's kind of the marginal buyer of a municipal bond these days?
I mean, it's still going to be those high tax buyers, those people in the 35, 37% brackets, because they're getting the most bang for the buck. Right now, let's say New York 10-year bond is right around 3%. Highest tax rate there, you're going to double that. You're getting 6% tax-free, right? And that income stream that's coming into you is really what they're getting at. And with yields higher, they're getting that income stream at a cheaper level, which is always what they want to see.
Help me understand how reducing federal funding for different agencies and where government workers taking buyouts, how can that trickle down to the muni market?
You know what? I think it's a knock-on effect, right? No doubt that a lot of money that came in through the pandemic and that stimulus that was distributed to state and local governments was used for hiring. We see that a lot on the school district level. We can point to Chicago Board of Ed as a perfect example, right? In the last several years, their staffing has increased over 20%, but at the same time, enrollment is down almost 28%. So there's really a mismatch there. So could they take a cue from federal government and say, look, now's the time to sort of tighten our belt and see where we can sort of trim some headcount? I think that really could be the impact we could see in our market.
Eric, what's the expectation for new issuance this year?
Yeah, I mean, I was just on a panel the other day, and I think everybody was sort of on board with the fact that given what's going on with Tax Cuts and Jobs Act uncertainty, it's still anticipated to be a pretty strong year. So let's call it close to $500 billion in issuance, which would be pretty strong. If there is some area of the exemption that comes under fire or really a threat to repeal it, you could see that number pop higher, certainly.
What other interesting issuance have you noticed in light of all the volatility?
Yeah, I mean, there's two interesting issues that are on the calendar coming up. One is for Kentucky Power, which, given the issues that we've seen with public power credit in general coming off of the LA fires, it'll be interesting to see how that prices. And another one is for a senior living home out in Manhattan Beach. Now, while it wasn't directly impacted by the fires, it is a California credit and is an area of the muni space, that high yield senior living, that really has seen spreads overly tight, I would say, over the last year. So it'll be interesting to watch that and see how that is received by the market as well.
So what's the expectation here, I guess, just for municipal bonds in terms of performance vis-a-vis Treasury? Because I noticed they're actually outperforming Treasuries a little bit year to date.
They're actually underperforming Treasuries.
Oh, underperforming. Yes, by 35 basis points. Yep.
Exactly. So, look, our expectation coming into the year that munis were going to outperform, and that was really based on the Fed being a little bit more active than it has been. In times of easing cycles, munis do tend to outperform, meaning that muni treasury ratios decline at a quicker pace. If the Fed becomes active again, we think that is certainly what's going to happen. But we think down the stretch in the next few months, munis will have the opportunity to outperform versus treasuries, especially as we head into the summer when there's a lot of cash coming back to investors and they're going to want to put it back to work.
All right, Eric Kazatsky, thank you so much. We appreciate that. Eric Kazatsky, Senior Municipal Strategist for Bloomberg Intelligence, talking to us about the municipal bond market.